What is happening, crypto fam? Get ready for a lightning-fast download of the news that's shaking up the markets. We're talking about major moves, unexpected rallies, and shifts that could redefine your portfolio. The pace is relentless, and if you're not plugged in, you're missing out. Today, we've got a deep dive into how global liquidity is impacting everything from stocks to Bitcoin, a close look at key altcoin setups that could be on the verge of exploding, and some groundbreaking protocol developments that are set to change how we interact with digital assets. Plus, we'll break down the latest on Bitcoin dominance and what it means for your altcoin strategy. You don't want to miss a second of this, buckle up, because the Bitcoin Bulletin is kicking into high gear right now. Stick around, you absolutely need to know this stuff. First up, we're diving deep into the macroeconomic currents that are making waves across global markets. Discover how a significant boost in Chinese liquidity is not only fueling a rally in equities, but also creating powerful tailwinds for Bitcoin itself. We'll break down the fiscal policies and monetary strategies at play and what this means for the broader economic cycle. Get ready to understand the hidden connections driving today's biggest market movements. Next, we're shifting focus to the altcoin arena, where a critical technical setup is hinting at a massive price surge for XRP, potentially targeting the $5 mark. But that's not all. We're also analyzing the vital metric of Bitcoin dominance. Is it set to rise, squeezing altcoins, or is a breakdown on the horizon, paving the way for a major altcoin season? We'll explore the projects best positioned to benefit from this potential rotation, giving you the edge you need to navigate the landscape. You won't want to miss this strategic breakdown. And finally, we've got a game-changing announcement from Tether. Get ready to explore their plans to launch USDT on the Bitcoin network using the innovative RGB protocol. This could revolutionize how we use stablecoins, enabling seamless transactions directly on Bitcoin, potentially leveraging the Lightning Network. We'll unpack what this means for the future of payments and digital asset integration. It's all here on Bitcoin Bulletin. Make sure you like, subscribe, and hit that notification bell so you never miss an update. Global liquidity, sir, ignites stocks and Bitcoin. This story matters because it reveals the powerful, interconnected forces of global liquidity and macroeconomic policy that are currently driving significant rallies in both traditional stock markets and the cryptocurrency space, particularly Bitcoin. Prepare for a deep dive into the fascinating interplay between Chinese economic policies and the global crypto market, as analysis from Bloomberg Intelligence's Jamie Coutts suggests a strong correlation between rising Chinese equities and Bitcoin's recent surge. This phenomenon is largely attributed to expanding liquidity within the Chinese economy, fueled by fiscal and monetary stimulus measures. While China's fiscal deficit stands at 6%, and its monetary policies are described as supportive but less aggressive than in previous stimulus periods, the impact is undeniable. These actions are injecting optimism into the market, leading to notable gains across various asset classes. Historically, Bitcoin and the Shanghai Shenzhen CSI 300 index have often peaked around similar times, a pattern that reinforces the theory that both are highly sensitive to liquidity conditions. Coutts' analysis indicates that the continued outperformance of equities in this environment suggests that fresh liquidity is still flowing into the system. This could potentially extend the current market cycle, leading to further gains for both Chinese stocks and Bitcoin as global stimulus measures continue to ripple through financial markets. For cryptocurrency traders, this alignment with traditional markets under favorable macroeconomic conditions offers a bullish signal, supporting the view that digital assets may continue to perform well, especially as we approach the latter half of 2025. Beyond China, the broader global economic landscape is being shaped by liquidity expectations and interest rate policies. Discussions around the Federal Reserve's potential rate cuts and their impact on long-term bond yields during the 2025-2026 period are crucial. Analysts are closely monitoring any divergence between the Fed's actions and the bond market sentiment. For instance, a scenario where long-term interest rates rise despite anticipated rate cuts could signal underlying market apprehension and potentially lead to increased volatility in equity markets. This potential divergence is identified as a significant risk area for the near future, with long-term bond yields acting as a key indicator of market confidence and future expectations. Furthermore, the analysis touches upon broader market vulnerabilities, including the significant concentration of foreign capital in U.S. equities, which has now surpassed foreign ownership of U.S. debt. This shift raises concerns about the stability of capital flows and the market sensitivity to fluctuations in the U.S. dollar's value. The strategic importance of China in global supply chains, particularly for critical minerals essential for high-tech manufacturing and defense, cannot be overstated. China's dominance in processing raw materials, regardless of its primary production role, presents a potential bottleneck for U.S. industrial and defense capabilities, underscoring the need for diversified supply chains and independent processing capacities to mitigate geopolitical risks. As the market navigates these intricate dynamics, investors are urged to stay informed about macroeconomic indicators, liquidity trends, and geopolitical developments. The ongoing interplay between global liquidity, interest rate policies, and asset market behavior will undoubtedly influence the trajectory of both traditional and digital assets in the coming months. A balanced approach, combining data-driven insights with strategic risk management, will be vital for navigating the evolving market landscape. Hold on tight, because the next story reveals a technical setup that could send one major altcoin soaring. And we'll also be breaking down the critical indicator of Bitcoin dominance. Is it a buy signal for altcoins or a warning to stay put? XRP's chart setup hints at a massive $5 rally amid Bitcoin sell-off. This news is significant because it highlights a specific technical pattern on XRP's chart that analysts believe could lead to a substantial price increase, even while Bitcoin experiences a downturn. Despite a recent 4% slide, XRP's price action is showing a classic cup-and-handle formation, a bullish technical pattern that often precedes a significant upward price movement. Analysts are closely watching this setup, with projections suggesting a potential target of $5 for XRP if the pattern plays out successfully. This potential surge is particularly noteworthy given the broader market sentiment, which has seen Bitcoin facing selling pressure. In fact, recent data indicates that Bitcoin has been hammered below $109K, with a recurring conference indicator striking again. Negative price action around annual US-based Bitcoin conferences has been well documented, and it appears this trend may have also applied to the recent Bitcoin Asia gathering. This Bitcoin weakness, however, could create an opportune environment for altcoins like XRP to shine if their individual technical setups remain intact. The cup-and-handle pattern is characterized by a rounded trough, the cup, followed by a smaller, downward-sloping consolidation phase, the handle. When the price breaks out above the resistance level formed by the handle's upper trendline, it signals a continuation of the prior uptrend. For XRP, this breakout could signify a powerful move higher, especially if it manages to attract significant buying volume. The $5 target is derived from measuring the depth of the cup and projecting that distance from the breakout point. Furthermore, the analysis extends to the broader altcoin market, particularly concerning Bitcoin dominance. For weeks, analysts have warned that a rebound in Bitcoin dominance could squeeze altcoins, causing them to underperform. Bitcoin dominance measures Bitcoin's share of the total cryptocurrency market value. When it rises, capital tends to concentrate in Bitcoin, and most altcoins lag. Conversely, when dominance falls, capital often rotates outward, leading to altcoin outperformance. Currently, Bitcoin dominance appears to be compressing into a triangle formation around the 58% mark on the 4-hour chart. Lower highs from the mid-60s have met a steady series of higher lows from the 57% area, driving the price into the apex of this triangle. The recent pushes into resistance have faded quickly, while the candles are now leaning on support. This suggests that downside pressure might be heavier than the buying interest above. A decisive close below the rising base of this triangle would confirm breakdown risk, potentially signaling a shift in market dynamics that favors altcoins. If Bitcoin dominance breaks below 58%, technical waypoints are positioned near 57.7%, 57.5%, and 57%. A move to these levels would align with improving breadth across the altcoin market. Many major and mid-cap altcoins have managed to hold their structures even after Bitcoin's recent pullbacks. Funding rates are calmer, open interest remains steady, and sellers have struggled to push altcoins to fresh lows. This resilience in altcoins, coupled with a potential breakdown in Bitcoin dominance, creates a favorable environment for selective altcoin accumulation. For investors, this setup argues for quietly accumulating high-potential altcoins before Bitcoin dominance loses critical support. Confirmation of the breakdown would certainly help, but the best entries often come before the broader market reacts. Projects like Pepinode, which offers a unique mine-torn system, Best Wallet token, with its expanding Web3 capabilities, Snorter, a Telegram bot integrated with a meme coin, and Token 6900, a popular degen meme coin, are highlighted as potentially benefiting from such a rotation. Stay with us as we explore the crucial factor of Bitcoin dominance and reveal which altcoins are poised to capture significant inflows if a market rotation occurs. And get ready for a groundbreaking development that could change how we use stablecoins on the Bitcoin network itself. Bitcoin dominance at a crossroads, altcoin season incoming. This story is crucial because it analyzes the key metric of Bitcoin dominance, predicting a potential breakdown that could trigger a significant altcoin season, presenting a prime opportunity for investors. For weeks, analysts have been sounding the alarm about a potential rebound in Bitcoin dominance, a metric that measures Bitcoin's share of the total crypto market value. Historically, when Bitcoin dominance rises, capital tends to concentrate in Bitcoin, causing most altcoins to underperform. Conversely, a falling dominance indicates that capital is rotating outwards from Bitcoin into other cryptocurrencies, typically leading to altcoin outperformance. While dominance had been drifting lower for much of the past month, recent consolidation patterns have raised the risk of a return to higher ranges, which would favor Bitcoin over altcoins. However, the latest technical structure and market sentiment readings suggest a different outcome. Bitcoin dominance currently sits on critical support levels and appears more likely to break down than to continue its upward trend. Such a breakdown would strongly favor a rotation of capital into select altcoins. If this scenario plays out, it creates a valuable window for investors to build positions in quality altcoins while prices are still relatively calm, potentially positioning them for substantial gains when market momentum returns. The key takeaway is that the current structure suggests that the risk of a breakdown in Bitcoin dominance is higher than the risk of a continued ascent, which would be bullish for the broader altcoin market. On the 4-hour chart, Bitcoin dominance has compressed into a tight triangle formation, with price action oscillating around the 58% mark. Lower highs originating from the mid-60s have met a steady series of higher lows starting from the 57% area. This convergence has driven the price action towards the apex of the triangle, indicating a potential breakout in either direction. The recent attempts to push higher have quickly faded, with candles now leaning on the support levels. This behavior suggests that selling pressure is currently stronger than the buying interest above the support, signaling that a downside move might be more probable. A decisive close below the rising base of this triangle, specifically below 58%, would confirm the breakdown risk. If this occurs, technical waypoints are identified near 57.7%, 57.5%, and 57%, where prior price reactions formed significant support levels. Such a decline in Bitcoin dominance would directly correlate with improving breadth across the altcoin market. Many major and mid-cap altcoins have demonstrated resilience, holding their structures even after Bitcoin experienced pullbacks to regions like the $110,000 mark. Furthermore, funding rates in the altcoin market have stabilized, open interest remains steady, and sellers have found it increasingly difficult to push altcoins to new lows. With market sentiment appearing divided on the immediate direction, the current price location is paramount. Tests of support levels often resolve lower when supply consistently meets price action. For investors, this setup strongly argues for a strategy of quietly accumulating high-potential altcoins before Bitcoin dominance definitively breaks below its current support levels. While confirmation of the breakdown is always beneficial, the most advantageous entries tend to occur before the broader market community reacts. Projects that offer a combination of narrative appeal, utility, and strong community engagement, such as Pepinode with its Minturn system, Best Wallet Token with its expanding utility, Snorter with its AI-powered Telegram bot, and Token 6900 with its degen meme coin appeal, are particularly well-positioned to capture inflows if liquidity rotates more forcefully into altcoins. This analysis of Bitcoin dominance is critical, but what if there's a development that could fundamentally change how we use Bitcoin itself? Get ready for news about Tether's groundbreaking plan to launch USDT on the Bitcoin network using a revolutionary new protocol. Tether revolutionizes Bitcoin payments with native USDT launch via RGB protocol. This development is monumental because it represents a significant step towards integrating stablecoins directly onto the Bitcoin network, potentially unlocking new avenues for payments and asset management. Tether, the issuer of the world's largest stablecoin by market capitalization, has announced ambitious plans to launch its USDT stablecoin on the Bitcoin blockchain utilizing the cutting-edge RGB protocol. This integration aims to enable stablecoin transactions to occur natively on Bitcoin, a move that could profoundly impact the landscape of digital payments and decentralized finance. The core innovation lies in allowing users to hold and transact both Bitcoin, BTC, and Tether USDT from a single, unified wallet. Furthermore, the integration is designed to potentially leverage the capabilities of the Lightning Network, facilitating fast, low-cost transactions that are crucial for everyday payments. The RGB protocol itself is an open-source framework designed to enable the issuance of digital assets directly on Bitcoin without requiring any modifications to Bitcoin's core protocol. A key feature of RGB is its support for client-side validated smart contracts. This means that while Bitcoin's consensus mechanism is used for final settlement, the actual state transitions and transaction details are kept private and off-chain. This approach enhances privacy and scalability, addressing some of the inherent limitations of on-chain transactions. By enabling USDT to operate on Bitcoin via RGB, Tether is tapping into the robust security and vast network effects of the Bitcoin ecosystem. The USDT-BTC trading pair is already one of the most liquid and widely utilized pairs across the entire cryptocurrency ecosystem, underscoring the significant demand for stablecoin functionality within the Bitcoin market. Tether asserts that the native integration of USDT on Bitcoin will unlock new possibilities for stable, dollar-denominated payments, all secured by the underlying Bitcoin network. This could position Bitcoin not just as a store of value, but also as a powerful rails for financial transactions. However, the announcement has also sparked debate within the community. Some users, like ex-user Grim, have raised concerns, suggesting that Tether's claim of native Bitcoin integration might be false and misleading. Grim argues that while RGB is secured by Bitcoin, it operates on a different architectural plane than Bitcoin itself, likening it to the Lightning Network in this regard. The distinction hinges on what constitutes native Bitcoin, with some believing it should only refer to Layer 1 solutions. This perspective highlights the ongoing discussion about the definition of native Bitcoin integration and the true nature of Layer 2 or off-chain solutions. Despite these nuances, the move by Tether to leverage the RGB protocol represents a significant technological advancement. It aligns with the broader trend of enhancing Bitcoin's utility beyond just being a digital store of value, exploring its potential as a platform for a wider range of financial applications. The ability to manage USDT and BTC seamlessly within the same wallet, potentially enhanced by the Lightning Network's speed and cost efficiency, could greatly improve the user experience for those looking to utilize stablecoins within the Bitcoin ecosystem. This integration could pave the way for broader adoption of stablecoins for payments and remittances, further solidifying Bitcoin's role in the global financial system. And that wraps up our deep dives into today's biggest stories. Now, let's quickly recap the essential takeaways and make sure you're subscribed for all the action. And that's a wrap on today's essential crypto updates. We saw how Chinese liquidity is fueling a rally in both stocks and Bitcoin, explored a bullish cup-and-handle setup for XRP potentially targeting $5, analyzed the critical Bitcoin dominance indicator that could signal an altcoin season, and broke down Tether's groundbreaking plan to launch USDT natively on Bitcoin via the RGB protocol. Don't miss out on any future market-moving news. Hit that like button, subscribe to Bitcoin Bulletin, ring the notification bell, share your thoughts in the comments, and follow us on all our social channels for real-time updates. See you next time.